solid economic data today. We got non-farm payrolls. Non-farm payrolls much higher than anticipated, but I had already expected that we'd get a solid number. This was a little more than I expected. Regardless, the stock market has moved downward. I don't think it's going to stay down too long. It could sell off towards the end of the day, but relatively speaking, what this means, the solid jobs data means that revenues are going to continue to flow into these companies. Meanwhile, bond yields shooting back up. For those of you who follow me on a regular basis, I put a video out on Thursday. Dump TLT was the theme for that. We'll jump in and I'll show you how I made some money today. Here's a look at non-farm payrolls. Of course, this one is widely watched. It gives us a pretty good idea as to what's going on with the economy. Now, I've been showing some economic data saying that this economy is actually kind of accelerating a little bit. We've seen GDP numbers coming in strong. We've seen retail sales numbers coming in stronger and stronger. Employment is a lagging indicator. So more than likely, we're going to see continuing employment numbers that are fairly lofty. Analysts are going to have to adjust what they're looking at. But there's something going on here. Civilian labor force, as you can see, is kind of declining. And I pointed this out a couple months ago. The thing is with civilian labor force, and this is something I sort of with the government on how they report this. If you're not on the payroll for a certain period of time, they basically consider you no longer looking. If you're no longer looking, then you don't count. So civilian labor force is actually declining a little bit because some people have just sort of fallen off. Those stay-at-home girlfriends that we've been hearing about on TikTok, they have fallen off the payrolls. They just simply don't want jobs. Okay, great. But we're also seeing the number of unemployed declining again. If you don't want a job, you don't count in this system. So what this means is the unemployment rate. Actually, my numbers came in 3.66%. And what I do is I actually go to the Department of Labor or Bureau of Economic Analysis when I'm looking at non-farm payroll data or any data, and I get the actual number. So the minutia of my decimals is a little bit bigger than, say, mainstream media. More than likely, they round it up to 3.7%. It's actually 3.66%. But a declining labor force with a declining participation of those unemployed and employed. So it's a little bit off. Clearly, if you go backwards to January 2022, there were far more unemployed, and you can see that there's sort of these numbers get a little skewed based on how the Department of Labor or the Bureau of Economic Analysis or whichever government entity is looking at anything. They tend to get skewed a little bit. How did I know this was going to happen? For those of you, I put up a video on Wednesday evening. I put my trade on yesterday morning. As I said in the video, here's personal incomes. If you want to stay ahead of the curve, ahead of, say, non-farm payrolls, the unemployment rate, GDP, these numbers, this to me is one of the most important economic indicators we have. The consumer drives this economy. Now, we have two factors right now that are really kind of propelling this economy forward, and it may not necessarily be the consumer themselves, but what you're looking at here in this chart is the rate of growth of personal incomes. As more and more people come on the payroll, the aggregate of personal incomes increases, and if it's on an increasing rate, so will expenditures. Pretty much the rate of growth of incomes dictates the rate of growth of expenditures. But what's that other X factor? The stimulus programs that Biden pushed through a little whiles back. Here's the thing. Eventually, the efficacy of that stimulus will run out. It's not going to be a hard hit to the economy, but you're going to see it slowly dwindle away. So hopefully that economic stimulus could actually propel the economy forward, moving forward. The Federal Reserve themselves is trying to shrink their balance sheet, which they're doing successfully. But as I pointed out in other videos, the money supply is starting to tick back upward. That's sort of the fuel or the proof that the fuel is burning within this economy. You've got the Federal Reserve shrinking its balance sheet, but M2 money supply is moving upwards. You've got personal incomes and personal expenditures moving forward, starting to increase. So despite getting a 3.66% unemployment rate, I kind of, looking at those numbers, well, okay, so some people fell off of the potential in there, and so it might be a little skewed. Regardless, personal incomes is moving higher at a rapid rate, and so are expenditures. This is revenue for companies. That revenue turns into profits. That's what drives the stock market. So if you do want to stay ahead of the curve on this economic data, this is where you look. Personal incomes, personal expenditures. Now, here, S&P 500 took a hit early in the morning, bounced a little bit. Last I saw, the S&P 500 was down about 20 points, 17 points. Not even worth really bringing up. Clearly, it had been down lower earlier. And even then, this was from Wednesday's Federal Reserve. The meeting, the S&P 500 sold off somewhat, but then rallied over the past couple days since then. Yesterday was a pretty solid day upward. I look at this with personal incomes moving forward, starting to head back upward. Same with expenditures. This means the S&P 500, SPY stock, whichever one you actually trade, QQQ, should continue to be buoyed. Now, we might get a sell-off today because of interest rates, and I'll get into that in just a second. But all these companies are going to be getting continually increasing revenues because of the continually expanding expenditures from consumers. Now, U.S. 10-year Treasury yield, this is sort of my de facto. I go back to this one. I trade TLT stock, which of course is the 20-plus Treasury price inverse to this. Now, you can see bond yields have pushed higher. I still don't know why they went lower just yesterday, and I took advantage of that. Nonetheless, above 4%. I've been saying for a while, probably see between 4 and 4.25, and we'll probably just mellow out there for a moment until we continue to get more and more data that suggests the Federal Reserve could either raise interest rates or lower interest rates. But the move lower in down to 3.82 yesterday for the 10-year Treasury, I didn't understand that. Woke up to it and said, well, I was planning on selling this TLT stock against this. And here's a look at TLT itself. Now, on Wednesday's video, the close was 97. And I have been looking for $3 to sell calls above, so 100 calls, 94 puts to buy. It's called a risk reversal. When I woke up yesterday, of course, the bond yields had moved higher, and I think it had something to do with the stock market sold off, so there was a flight to quality. But I knew we would be getting non-farm payrolls. I didn't expect that we would see this big of a move. So I sold 2 calls for every 1 put I purchased. But since TLT stock was trading at 98.50, it actually shot up to about 98, I want to say 65, 70, 75, somewhere in there. And that's about the time, it was about 0800, 0900 my time. Yes, I'm a veteran. A, B, I'm in mountain time here in the United States. I sold the 101 calls versus the 95.50 puts. Now, let's get into the numbers real quick. All right, here's sort of a bullet as to what I put on the trade yesterday morning. The 101 calls, remember I did a ratio 2-to-1, selling the calls at 55. I just got out at 15. Then buying the puts, 95.50 puts, I bought them at 35. The alert just hit on my computer. I sold out at 85, so I made a quick 50 cents there. Plus, of course, the 40 cents for each of the calls times 2. So it was a pretty decent day, pretty quickly. Now, and I don't, usually show like these kinds of numbers on a regular basis. I'm not about like, oh, look at my account number or anything like that. That's not my modus operandi. But nonetheless, what I do try to show is staying ahead of the curve. It all boils down to the economic data. But it's difficult for some people to understand. There's so much of it. However, if you pay attention to the the more important ones, personal incomes, personal expenditures. Of course, we're looking at inflation right now, but the effects that income and expenditures will have on, say, GDP, retail sales, these are hints. I kind of knew that we'd have a pretty good non-farm payrolls number today. This was far beyond pretty good. The market is looking at this and realizing, wow, the Federal Reserve is not going to be lowering interest rates anytime soon. That would be like throwing nitro on into a car that's already maxed out. The economy isn't moving that fast, but should the Federal Reserve move to a policy accommodation stance by lowering interest rates, this could really accelerate the economy and inflation will head right back upward. So they have to balance this. And I knew going into this week that we wouldn't see information that would give the Federal Reserve enough to say, yep, we can lower rates now. We'll probably continue to see some pretty solid numbers going forward. My expectation, I talked about this over Thanksgiving, that eventually we see the economy getting a little too hot. And if the Federal Reserve needs to tweak things, maybe pushing up about a quarter point or a half a basis point throughout 2024, sort of fine tuning. They didn't get it right the first time. That's almost an impossibility, going from as low as those interest rates were at some point to as high as they did as fast as they could. They didn't get it right. They don't know that. They won't know that. This takes time to work through. In the meantime, pay attention to personal incomes, pay attention to expenditures. This will give you an indication of how rapidly the economy will expand, because those expenditures will drive businesses to make decisions like non-farm payrolls. If you want to stay ahead of the curve, make sure to hit the like and follow button. I'm going to continue to put out some more information. We've got a bit more economic data coming out next week. I want to incorporate that. I'll have some videos out for you next week. We'll see you in the next video.